very happy to be here. So my name is Geoff Cook. I'm the CEO and co-founder of Meet Me, which is one of the apps of the Meet Group. Meet Group is a publicly traded company on NASDAQ, about a $300+ million market cap. So I was asked to talk about consolidating the fragmented landscape, which is something that we're actually currently working on. We recently closed on 2 acquisitions, one of a company called Scout, which was about a $60 million acquisition, and another of a company called If We, which had 2 apps, Tagged and High Five, all largely in the dating space. And that was about a $60 million acquisition as well. I started the company back in 2005 along with my brother and sister. Originally, actually, it was called My Yearbook. It was a social network for meeting new people. 2011, we really went into mobile. At the time, we were 90+% web. Now we're 90+% mobile by both revenue and by traffic. So we definitely have kind of rebuilt the revenue engine for mobile and rebuilt the engagement engine for mobile. So this is how we view our mission: really innovate, acquire, and build the largest mobile portfolio for meeting new people. And you'll see that we kind of view this as 2 sides of the same coin. You got to innovate, build new products. For us, that right now means video, and I'll get into that a little bit more. And then acquire, and we acquire mainly for the network effects that it brings us. So if we believe in video, and we believe in kind of the data tools that we have to help surface users to each other, then we should be applying that to the biggest audience that we can. I think one reason we pursued portfolio as opposed to just a single app is because, at least if you look at the dating landscape, it's never really been winner take all, right? There's been, I think it's been defined by a collection of users in various kind of ponds, and the ponds that consistently bear fish for that user tend to be the most popular. So each of these has some demographic. Tagged, for instance, is, at least in the United States, largely African American. If you look at Badoo or OkCupid or Meet Me, there's differences between those communities in terms of socioeconomic ethnicities and so forth. So I think there's a difference between how people, there's a niche aspect to it. There's also a difference in how people want to find others to meet. When we survey our users, we find that they use between 3 and 4 apps over the course of the last few months. And at least for Meet Me, some of those core apps are Plenty of Fish and Tinder. So when we put together, I mentioned scale was kind of driving a lot of our thesis on putting these assets together. You could get a sense for that scale here. So Meet Me has 5 million monthly users. Scout has 3.3 million. If We has 2.3 million. So a year ago, we were just Meet Me with our 5 million or so users. Probably less than that because we've been growing as well. And now we've doubled that. And that's important because we have a fairly sizable team on the data side that's trying to make connections to other users, trying to build the right algorithms. The more users you have, the better you're able to surface local and interesting users to others. You can get a sense for the increase in chat. It went from 30 million chats per day being sent from our users to 65 million. And the new users per day is roughly 100,000. And so I think what's interesting about chat is when we recently combined the Meet Me and the Scout audience. If We was very recent, so we actually haven't done anything to combine those. That only just closed about 6 weeks ago. But when we took the users inside of Scout and surfaced them inside of the Meet Me app, and in the Meet Me app and surfaced them inside of Scout, and then enabled chat to go across the networks, we saw a 15% bump in total chat, which is basically the whole kind of thesis that if you put these users together, you'll be able to have more engagement. You won't run through all the users quite as quickly. This is how I view the industry landscape. I think some apps have soft paywalls. Hopefully you can see it. The soft paywall on the top, hard paywall on the bottom, casual relationships to intimate relationships. So Meet Me, Scout, Tagged, and High Five would all be in the top left quadrant, meaning they're at the most casual end of the spectrum, meaning our users are here for chat, they're here to date. When we ask our users, why are you here, it's really, you hear all of those reasons. You don't just hear dating. People have a dating interest, but they're not necessarily looking for a date for the weekend. We find that on average, they spend a month chatting on people on the network before they meet, although they do meet in large quantities. So we see about half of our users end up meeting in real life someone who they first met on the network. On the far right, you have intimate relationships, by which I mean at the far end of the spectrum would be like finding a mate, like an eHarmony or a Match.com. And then within there, you have different business models. So soft paywall would be advertising or virtual currencies. Hard paywall would be subscription. Some of these apps obviously lock things like chat behind a subscription paywall, and others don't. Ultimately, it's probably useful to have a diversity of business models in this space, although we tend to be more focused on the free and freemium versions. And one of the reasons that we are focused on that is because we think that ultimately what we're trying to do is connect users to the broadest set of users that we possibly can. And we've seen, and every time we've kind of experimented with subscription, that we tend to churn out more users than we like. So what do we look for in an acquisition? I think we tend to be looking for a couple of things, scale really being the chief one. So something that will enable us to take advantage of the things we're already building. Right now it's video, data algorithms. It's something where we can plug technology we already have into something and ultimately maybe lead to more user choice. Within that, it could be regions. So if there's a niche or a reason or a region that would enable us to get more users, that's of interest to us. An understandable model, by which I really mean, we can understand how the business makes money. The first couple acquisitions we've made have been of apps that we understand reasonably well. They have a business model that looks largely like ours, like the Meet Me apps, in the sense of being ad-driven, having a small subscription component, and having a freemium of a virtual currency. And then EBITDA, because we're a public company, we care, of course, about profitability. I believe the whole dating space trades on an EBITDA model, and I'll get into that a little bit more. So, one of the reasons we've been acquisitive is because we are basically doubling and tripling down on video. I believe video is going to be, and I'm certainly not alone in thinking of this, but Mark Zuckerberg has kind of talked about video as important as mobile was. So the transition from web to mobile was obviously a phase shift and a critical one. Video might be that important. And so we've been hard at, if you look at Momo, which is the #1 really dating app in China, they recently added a video product, and over the course of about a year, they were able to triple their revenue, double their market cap. They have a market cap bigger than the Match Group. So it's only a matter of time before they become a global player and acquisitive of brands outside of China. And the key driver of this success for them was really the addition of live video and the kind of attendant tipping model, monetization engine that goes along with it. There's always this thought, well, maybe Chinese apps, there's a cultural thing going on that won't translate. But at least with respect to live video, we see it being successful in other contexts too. On Facebook, at least in the US, we're seeing it in Live.me and Lively, two very popular apps that are doing extremely well in monetization in the US App Store. So one of the reasons that we like video, beyond the fact that it's being proven in certain aspects to be an interesting model, is that one of the things we've always struggled with on Meet Me is how to make 1 million+ users logging in every day feel active, right? And we used to talk, and we still talk about Meet Me and Tagged and Scout as kind of the mobile version of the bar or the coffee house, like a casual gathering place. People are there for multiple reasons. Maybe it's to chat, maybe it's to hang out, maybe it's to date. And I think what we never really had was the live entertainment, right? If you think about a popular bar or coffee house, there'll be live entertainment. There'll be something to either listen to or watch. And it seems to me that live video is that for the Meet Me community, and hopefully for Tagged and for Scout as well. Now that we've only just recently launched it, it actually only went live on Monday of last week to all of our users. We've been ramping it up over the course of 6 weeks or so. But it does seem like a lot more active. So when you come to Meet Me, there's always somebody on video, there's always somebody chatting. And it seems like a very strong product and very compelling. And so this is essentially how the acquisitions kind of fit into this larger product plan. So we began launching to beta groups this video product in late March of this year. Just recently finished rolling it out to enable it to 100% of our users as of last Monday. We'll be launching a monetization, a gifting model into the video probably late summer, so July, August, and then bringing it to Scout and Tagged around that same timeline. So Tagged video will hopefully be rolling out in the next few weeks, and Scout should be rolling out around July. And so by the end of this, you go from having, on a recent day, we had about 250,000 people viewing video. Once we add Scout and Tag to this, we essentially have 500,000, as long as those metrics look anything like it. So this is the reason we're buying companies. We're basically saying, well, look, we believe in our product, we believe in our product strategy, so let's just double down whenever we can. This is some very early data on video. It's been pretty interesting, I think. So right now, one of the things we see in video, which I think is pretty interesting, is that if you have a community, as we do, about 1.2 million people, we're seeing about 25 to 50,000 of those broadcasts on any given day, but we're seeing about 250 to 300,000 view on any given day. So you see basically 21% of DAU on a recent day watching videos, right? So 21% of the users who come into the app are watching a video. This is a brand new feature, and they're engaging with it for about 20 minutes a day. And what's interesting about that is the previous amount of time spent was 10 minutes. So the average user of Meet Me prior to the launch of video only spent 10 minutes with the app each day, and they did it across 10 sessions. It was a chat app, right? It's for finding new people to chat with, and what kept people coming back was an incremental chat. I get a chat that says hi, I check my push notifications, I say hey, and maybe send another one, but that only takes about a minute. And so the average session was a minute, but people came back 10 times. The concept of video is, if we put kind of interesting trending videos at the top of the inbox, as we have, at least on Android, launching soon on iOS, and we make it very easy to find interesting people around you, maybe we could take one of those sessions that is currently only a minute long and turn it into a much longer session. And that was the concept. It seems to be working, where we're now driving 20 minutes per day of viewing time from the viewers, from 20% of the audience. And we believe that over time, we could potentially grow those numbers and then begin to monetize that additional time spent as well. There's a lot of engagement going on there, 30 chats on average per broadcast. And in terms of likes per broadcast, it would be about an order of magnitude higher than that. So there's 300 plus likes. And what we see is when we ask users why they're doing it, they tell us that 65% say they feel more attractive after broadcasting. And that comes down, I think, to the fact that they're getting so many comments, and so many of them are positive, and they're getting so many likes. So I think that's one of the more interesting stats. I've launched video products in the past and not seen anything like that, where people, I think, felt more awkward. But I think the model of this live video, where it's really one to many or few to many, is what's I think, making it successful. 61% say they're more likely to be attracted to someone who has broadcasted. The middle one is kind of a good example of why people are doing it. I love being on live. It's like you're famous. I went on live and had like 7,900 people. So, I mean, there's this sense that when you're broadcasting live, you're the kind of the star of your own reality show. And you're getting a lot of flirty and interesting comments from your fans. So we acquire to accelerate our product pipeline. That's clearly one of the things we're interested in doing. We've already made the bet on video, so if we can double down, we will. We also acquire if we see the opportunity to just improve the metrics of certain competitors. So in the case of the most recent acquisition we did, which was If We, maker of Tagged and High Five, you could see that there were some differences in engagement in terms of chats sent per daily active user, 12 versus 25, in terms of average revenue per user, 79 cents versus 241, and in terms of advertisements per daily active user, ad load. And so when we see opportunities to potentially converge metrics, we believe that there's obviously a financial opportunity here. And in particular, what we've said publicly is if we can close the gap on ARPU while also closing the gap on ads per DAU, and on ARPU actually only going up to about 60% of the Meet Me value, which I think is rational given the differences in kind of international versus US. It's a $12 to $18 million revenue opportunity. So we're looking for just opportunities to kind of take what we've learned and apply it to something else. Meet Me, this gives you a good sense of at least of our market cap trajectory. This is year-end market cap from 2013 to 2016. What should stand out is that there's at least a loose correlation between EBITDA, which is basically a measure of profit, earnings before interest, taxes, depreciation, amortization, and market cap. And so you can see that we went from a $70 million company to a $68 million company, while more than doubling EBITDA, but still it's kind of too low to potentially matter to investors. And then we went to 20 million and said, this was the year we said we're going to focus on EBITDA above everything else. And we kind of saw that kind of accrue to the benefit of the company. And then the next year we saw kind of continued growth in EBITDA and continued growth in market cap. And now, part of the acquisition strategy is to continue to grow EBITDA. So when we are looking at different properties, we are looking at what can it provide in year one and year two profit. These are, I tend to think of the entire dating meeting space as being EBITDA driven. Grindr, when it sold to Kunlun at 60% of itself and recently completed the other 40%, it was an EBITDA multiple of about 10 for the initial investment. I think it was more than that for the buyout of the remaining 40%. But you can see that we traded at 8 times EBITDA multiple. Snap, not really relevant. Match and Momo are good examples. Match is trading at 11 times multiple, Momo at 8 times. So really 8 to 11 is where you're seeing some of these public companies trade. And then if you look at private company takeouts, If We and Scout, we bought at between roughly a 7 times EBITDA multiple. Grindr was taken out at a 7 times EBITDA multiple, forward EBITDA multiple. Plenty of Fish went off at a 12 times trailing, which was probably 7 to 10. So my point in sharing this is, this is how the dating landscape trades. It's EBITDA multiple. Maybe you have to tell a story to get to year one or year two, but this tends to be how it trades and also why it's relatively difficult to raise money in dating. This is essentially the message, is once you reach a certain level of scale and growth, it's 6 to 8 times. Now, obviously, it could potentially be higher than that, depending on how fast your revenues are growing. If your revenues are growing 100% year over year, then, of course, that could be much higher. But for now, if you're in kind of a 10 to 30% revenue run rate or rate of growth, and you are showing some good EBITDA, some signs of some profitability, that's basically where it nets out. So I want to leave some time for questions. Hopefully there is some. And in terms of who the acquirers are, I mean, right now it's been, we've bought 2 of these recently. Match is always on the sidelines. They could always come in. China, Kunlun has obviously bought Grindr, but there hasn't been a lot of activity in China recently. In part, I think it's exchange rate driven, and in part, I think there's just been a lot more clampdown from the government there on money flowing out of China. But that's kind of the reality, but that could change.
So I think we've got time for questions. I have one.
Good.
Which isn't quite as, I feel it's probably a little, I don't know, simple. But if you could acquire any other company, and let's say that you could A, afford them, and B, they were open to it.
Yeah.
Who?
Well, given that we are talking to others all the time, I can't really answer that question.
Oh, come on. Who's your favorite?
Who's my favorite? Some of the things that we probably won't acquire, but would be of interest would be, Badoo is doing very similar things as MeetMe, but relatively similar. When 2 companies are so similarly sized, it becomes harder to put together. But I've always had at least respect for their product chops and kind of how quickly they move. So I think Badoo's of interest.
So when you're do you have essentially a pipeline of acquisitions that you're slowly moving through?
Yeah. So we, I would say when we originally merged into a public shell or a public company, KPOS, in 2011, the idea behind it was that we would do future consolidation. And it took a while to get to the point where kind of private market and public market valuations kind of came into a line that allowed us to do a deal. But we had this thesis for a while. And so, yeah, I think there are others. There's not an unlimited number. But, can you do one every 12 to 18 months? I think you probably could.
So who's next?
All right.
Question.